What's going on, everybody? Welcome back to another episode. Well, not just any episode.
Not just any episode.
The very first episode of the Melanin Money Show, New York Stock Exchange edition. And we are super excited to be here. We hope you guys are as excited as we are. And I know in the world of AI and green screens, you might be wondering, is this the real deal? Well, this is the real deal.
We are at the New York Stock Exchange. So if you're listening on audio, I encourage you to go on YouTube and really watch this episode so that you can see, first of all, how great we look at the New York Stock. This could not be the last time we do this episode here.
Facts.
But it's just, it's amazing. So if you're listening, make sure you tune in on YouTube for this special edition of the Melanin Money Show.
Absolutely. So, man, before we even get started, let's just have a moment to reflect on the journey, right?
Yeah. How does it feel for you? Because you've been a financial advisor. I'm assuming stepping foot in the New York Stock Exchange was a dream of yours, let alone to be recording our podcast here. So let me know how that feels for you.
Yeah, I mean, it's kind of a surreal moment. I know we got a chance to come earlier this year as guests, right? Just to get to understand more about the facilities and how they're trying to expand their partnership. So for us to be able to come here and now be a part of that expansion, it feels surreal. I mean, as a financial advisor, this is the pièce de la résistance. This is the dream, right? To be able to be here and record. So super grateful, super honored. I mean, we started recording these episodes on
Zoom, from apartment bedrooms and Mac cameras.
Yeah. So to go from that to this is, I'm not usually a man of few words, but it's pretty surreal.
Yeah, I think it's also a testament to consistency, right? We've been doing the podcast for 3 straight years, not missed an episode, every single Wednesday dropping into have that consistency turn into this surreal moment. I mean, bro, we're on above the trading floor, trillions of dollars traded on this floor, man, and we're able to give the people great information from here. I mean, it's surreal, man.
Absolutely. And so, being that we are at the New York Stock Exchange, obviously, our show, we touch on a variety of topics between wealth building, tax saving, entrepreneurship. We thought it would be good to kick this off with some good news, right? As of this recording, the S&P 500 has erased all of its losses for 2025. There's a lot of turmoil. There's a lot of volatility in the market. And a lot of people maybe, got nervous and sold some of their positions. So it's really exciting to see that the market does what it always does. It rebounded, and we are feeling the confidence of market sentiment for the rest of the year.
Yeah, I mean, I feel like, at least from what I can remember in the last 10 years, I don't think we have a more rocky start to the stock market from an investing standpoint, with tariffs and the change in the presidency and all the negative news, and for literally the worst things to happen, and for almost 6 months into the year for all of that turmoil to really be null and void, because the stock market has erased all its losses. I think it's a bigger testament to just staying the course.
Yeah.
Right? Because if you got caught up in the hoopla, you got caught up in the noise, and you sold your positions, you actually locked in that loss. And now you missed out on the opportunity to recover all those gains. So you sold low, and now you'll be buying back high, which is the exact opposite of what you're supposed to be doing.
Yeah. So we thought it'd be good for those of you all who maybe didn't get a chance to take advantage of that, or want to double down on some of the investments you have, to share some of the stocks that we think will do pretty well. If we have the time, maybe we'll do 25.
Yeah, I mean,
stocks 2025.
The top 25 stocks of 2025?
Yeah, why not?
That'd be a crazy episode.
Let's do it. Yeah, let's do it.
You got 25 in you? Because this is going to be...
I think so.
Okay, this is going to be more you than me.
Yeah.
Okay. Well, before we get into that, give your advisor warning.
All right, so glad you said that, right? This is not financial advice. Do your own research. Consult with an advisor of your own. If I'm not your advisor, consider hiring me, okay?
Yeah.
Shameless plug, but do your own research. Past performance does not indicate future outcomes, but we definitely want you to take this information from this episode, do your own due diligence, and considering entering, staying, or doubling down in the market.
Now, one thing I can say, as your friend, and you're my financial advisor,
you're
very smart at what you're very smart, and you're very great at what you do, my brother.
Thank you.
I sent you a screenshot the other day, and I was like, I owe you a few drinks, man.
More than a few, but I'll take it. I'll take it. And thank you for staying the course.
Yeah, of course. Yeah.
Because I know that it was rocky. But of course, for those who don't know, me and Carter actually met at a financial advisor conference, right? So Carter got his financial advisory license as well as a CPA license, decided to shift priority and focus on the CPA side, which made it perfect for us to partner. So he still say all that to say, he does know a thing or two, right, about this.
I know a lot, but I know when I'm outmatched.
Same thing when it comes to tax strategy, right?
Yeah.
So it's a great complementary partnership. And so today we're gonna dive into some good ones.
Okay, so what is number one on your list? Before we go there, is this in any particular order, or is we just throwing out stocks?
No particular order.
Okay,
right.
cool,
We might break it down in groupings in terms of technology or healthcare or consumer staples and things of that nature, but no particular order.
All right. Well, I'm ready whenever you are.
Cool. All right. So I would say number one in this grouping is NVIDIA. Right?
NVIDIA, okay.
And NVIDIA, because of the demand for regenerative AI, they have such an amazing infrastructure with all the gaming that people are doing nowadays, the chips, all that jazz. NVIDIA is going to still be, in my opinion, a staple, even with what China's doing, even with all the disruption. They have what we would consider, first movers advantage, right?
Okay.
I believe that NVIDIA still stands to have a lot of upside with their stock, and so yes, we did see a lot of volatility this year, and we saw a lot of upside last year, but I think there's still so much more room to grow for NVIDIA, and now is an amazing time to remain invested in NVIDIA.
For the people at home, what does NVIDIA do? Like, what's their main focus? Is it just chips, or is it AI, or is it both?
So they build, so the simplest forms, NVIDIA builds the infrastructure, right, the chips and the technology for the technology that we see, right?
Okay.
So when it comes to the reason why they boomed when AI was a thing is because AI needs infrastructure to sit on top of.
Okay.
NVIDIA has that infrastructure, right? And so because of that, anybody that wanted to do anything AI related, right, was all roads led back to an NVIDIA. Of course, now we have market disruption and things of that nature, but they have the infrastructure to support the technology that is disrupting the entire world.
And if I'm not mistaken, NVIDIA just passed Apple as far as its valuation.
Yeah,
So
which is big.
Which is crazy, right?
And they actually led the rally that allowed, I think it was the market added like $2.2 trillion back.
Yeah.
The other day, and they led that rally, right? And so between that and their infrastructure and where the world is going with AI, NVIDIA is going to be a strong staple in the market for years to come.
All right. Number two on your list, I see Microsoft.
Yes. Microsoft actually is a big investor in OpenAI, right?
Really? Okay.
But they forged a really strong enterprise partnership, and as a result of that alone, right, on top of strong earnings growth and stability, Microsoft, I believe, because of the upside of AI, right, and their investment in OpenAI is going to allow them to have a strong foothold in the market. I think it was a very strategic move because here's the thing, when it comes to mergers and acquisitions or just investing in other companies, a lot of times some of companies that you perceive to be competitors, they're actually investors in those companies, right?
Let me get some of that. Y'all need some capital?
Exactly.
I got all this free cash flow.
The conversation usually goes like this, right? It starts with, can I buy you outright?
Yeah.
Right? And they're like, no.
Yeah.
Right? Then it's like, okay, well, can I then invest a majority stake in your company?
Yeah.
Yes, right? Because they use that money for growth capital, to scale, to build infrastructure. Because as we saw OpenAI, as a matter of fact, full circle moment, the hotel we're staying at, January 2023 is when I first learned about OpenAI, also known as ChatGPT, right? And so I first learned about it. Of course, it's improved dramatically since then, but I was like, even then, I was just like, yo, this is crazy.
Absolutely
disruptive.
Yeah.
So for Microsoft to have the foresight to say, you know what? Instead of us trying to completely build our own, will they be building systems that are AI first and have some AI components? Sure, but naturally they're going to lean into their partnership because they're heavily investors.
Yeah, I think that's a microcosm of business, right? First, if you see somebody disrupting your market, you try to buy them out. You try to little bro them, like, hey, let me get that.
Yeah.
And they say, no, okay, cool. I love what you're doing. Can I help you grow faster?
Right.
Because if you're going to disrupt me, let me at least have a piece. That way, I'm leveraging my bets. I'm still growing my company, but I'm giving you money to grow yours, which is going to grow anyway. At least I own a percentage of your company.
Yep.
Amazing.
So that is always a good move. So we are very bullish on Microsoft as a staple in your portfolio.
Okay, number three is still my favorite stock.
Yeah.
Just because it's been my favorite stock the past 5 years. Probably the stock I've literally made the most money on.
Facts.
And it's the company I just truly believe the most in because it has a foothold on America, and that is Apple.
Facts, right? And I don't think this one we gotta oversell you guys on.
Yeah.
But Apple, again, because for a short period there, people continue to question Apple's innovation. And wondered if it can stand the test of time with all the disruption that was happening in the market. But Apple is leaning AI first. As you know, they're making integrations with Siri.
Yep, have it on my phone right now.
Right, which, you know, at the end of the day, Siri, which we may or not realize it or not, has always been artificial intelligence, right? We've just seen an emergence of what that looks like now, right? And so Apple, with its dominance in market share, and because of how the foothold that they have in product, right? 'Cause here's the thing, your apps mean nothing without the technology that it stands on, right? Which is why they had that friction with Facebook and ads and things of that nature, or the 30% that they were taking from anybody who sold any product in the App Store, right?
Yeah.
And so we got to understand that because of Apple's foothold in the physical products that they own, all they have to do is always make those software updates to continue to iterate and expand in that sector, right? So we know that Apple is no secret to innovation. They understand what's happening in the market. They have strong market share, and they have a strong moat because Apple has created an ecosystem where once you get into the ecosystem, it's hard to get out, right?
You know what? I look at Apple as the IRS of technology.
That's fair.
No, because literally, like you can sell whatever you want on my platform, but I need that scratch. I'm gonna need my 20%. I'm gonna need my 20%. I'm gonna need my 30%.
Yeah.
I think I told you the other day. I tried to boost the Instagram post through Apple on my phone, and Apple charged a 30% fee on top of the money I was trying to boost the post on Facebook. So they can literally be like, you can do whatever you want, but we need our scratch first. So they're the IRS of technology. Y'all heard it here first. If anybody steals it, y'all heard it here first. Anyway.
Facts, right? So Apple will continue to be a strong. Now, granted, are they leaning more towards a value company than a high growth company? I would say, but it's a company I would want to own for the foreseeable future for sure.
1,000%. 1,000%. All right, number 4, I'll let you speak on this one, but it is Amazon.
Yes. And I know many of you have stuff in your Amazon cart right now as we speak, right?
I think you're single-handedly raising the stock price of how many packages I see get delivered to your house on a regular basis. First of all, okay?
Well, they're not all mine, first and foremost. And secondly, I am doing renovations to my house, right? So I'm buying little odds and ends. But yes, Apple is getting their fair share. Amazon is getting their fair share out of me. So AWS, which actually is a part of Amazon that many people don't think about, but their cloud services make up a very strong portion of the revenue they generate.
Yeah, because they have a partnership with the NBA and the NFL and all that as well, right?
Yeah. They're cloud computing, right? Okay. So AWS remains strong. Obviously, we know a few years ago they acquired Whole Foods, which gave them distribution in the market in terms of fresh food.
Man.
Like chess moves, right?
Chess moves.
Seeing things 17 steps ahead.
Yeah.
Right. And I think AWS's profit margin is like north of 25%. And for such a high growth company, even though it doesn't seem large, that 25% that they're getting for the revenue that they're generating is substantial, right? And we know that Amazon is known for continuing to aggressively reinvest in growth. And so with that, plus the AI powered tools that they're leaning into, as you can see a trend, the companies that are currently on the list, or a lot of them at least, are thinking AI first or AI centric when it comes to innovation and growth. And that's why we believe that Amazon will continue to be a staple in your portfolio as well.
And I think one of the most one of the most unknown things about Amazon, or at least underrepresented things about Amazon that the public doesn't see, is they're not just focused on the shipping of goods to your house. Like that's a main pillar of the business.
Right.
But they branch into the AI space. They branch into the AWS. They branch into by purchasing Whole Foods. So they're dominant in one market, but they're also putting their tentacles in other places to build diversification and stability in the company.
Yeah, and the one thing I love about publicly traded companies, one, they have to disclose everything they're doing.
Yeah.
So that gives you a front row seat to how to think about your small business, right? Just because you're not doing billions of dollars in revenue doesn't mean that you can't take some of the core tenets of what they're doing to make decisions in your business, right? How are they allocating resources? Like one thing we always say all the time in our company is we look at our company as a diversified portfolio, right? It's all about resource allocation, right? And when you think about portfolio that has sector rotation or whether you need to rebalance it, right? What you're saying is, okay, we're doing really good here. Let's take a little bit. We still believe in this over here. Let's take a little bit of those profits and move it over here, right? So like when something's doing really well in your company, yes, you should be focused and continue to grow that. But how can you rotate some of those profits into another area to further create your moat, stabilize your business, and expand at the same time?
Okay. Now this next one. This one was surprising to me because I'm actually not down on this company. I just was, for the first time in the last 10 years, fearful of what the future held for them.
Yeah.
And that is Google.
Yeah.
Right? With AI and ChatGPT, like I stopped Googling stuff like 3 months ago, bro. I just asked ChatGPT, can I get a more robust answer? So I'm really curious to know, why you believe that people can, have faith in Google going forward.
Yeah, they're still the leader in digital advertising, right? There's no secret there.
Yeah.
And they are doubling down on their own AI, right? So people are now they're thinking like, okay, well, comparing search to ChatGPT, I'm leaning ChatGPT because ChatGPT can search the whole internet. But Google is also doubling down on their own version, right, which is Gemini. And as a result of that, we can't knock the fact that the data, right, that Google has access to and how that will influence the development of their AI products, right? So for me, do I think there'll be a short-term impact with the disruption? Of course I do, right? And I think we've already seen some of that. But I think long-term, with just the sheer size of the company, right, I believe that they will evolve. I believe that they will make adjustments. And I believe that because of the data that they have access to, it will continue to be something that can be a great company for the foreseeable future.
All right. This next company was probably, if it was a trophy for comeback kid of the year, a comeback company of the year, because I remember this company, people were... 2022, people were digging the grave, saying it's over, calling this young buck, all types of, names and putting negativity, saying he don't know what he's doing, he lost his edge. And then he came back and showed them who he is.
Right.
And that is Mark Zuckerberg, the owner of Facebook, now known as Meta, which had one of the greatest rallies that we've seen in recent years. And their stock prices up at all-time highs. And they've now got to the space of virtual reality, which I think was a great move. So just... I love this company, but give me your insight on why people should stay invested.
I remember like it was yesterday, and I had the receipts to prove it, as always, right? People were just, like you said, beating up Mark Zuckerberg and Facebook and all the decisions that they were making. But I looked at the balance sheet, and I looked at the company as a whole, and I knew that this was going to be a company that was still going to do well for the foreseeable future. Now, when we look ahead, again, when it comes to their ad revenue, significantly strong. We know that personally and intimately, right?
Zuckbucks. Okay, we have a certain allocation of the revenue in our company, and we title this Zuckbucks. So that is Mark Zuckerberg's money. Okay,
right, with not ours. We know just like the IRS, right? So if Apple is the IRS of the technology world, then Apple is not Apple, but Facebook or Meta is the IRS of what the advertising world.
Advertising world. Need all of that. Okay.
Yeah. So. When I think about Meta, the reason why I'm so bullish on it is because now they're leaning into AI when it comes to their ad platform. So you think about all the ad agencies that people are spending all this money to run their ads. The general consumer is now going to be able to go direct to Facebook and say, hey, I want to reach these people. This is what I sell. So how many more people you think are going to get in the ad game? Because before they're like, oh, well, I'm not spending $10,000 a month on an agency and giving them 30% of my revenue. I could just go directly to Facebook, right? Tell Facebook what I want, because now it's AI generated and they can create the creative as well, right? You're going to see an advanced amount of people getting into the advertising game because there's no barrier to entry, right? We don't run our own ads and we're very smart, right? So what does that tell you? That means there's going to be so many everyday consumers that are going to be getting into the advertising game because Meta is going direct to consumer and eliminating the middleman. And not to say that you couldn't go before, it's just too complicated. Looking at that dashboard, not knowing what it means, that is going to go away, and the everyday person is going to be able to say, hey, I sell these necklaces or candles, shout out to Connie. I sell these candles, here's who I'm trying to target. They're going to do the creative, they're going to do the targeting, everything you need to know as if they were your own ad agency. Why? Facebook is incentivized because that gets them more market share. Now more people are going to get into the market. It's going to continue to grow their ad business, now grow their AI base because they're using AI to do it, which I believe I'm super bullish on Meta for the foreseeable future. Not to mention their propensity for acquisition, right? So who knows who's going to be in their acquisition targets to further bolster their.
They bought WhatsApp, they bought Instagram, and for billions of dollars, they're not scared to spend any money.
Right. So it'll be very interesting to see, but I believe that Meta is going to take the world by storm.
Well, that's crazy. I mean, you saw my facial expression. I'm just thinking, like, number one, if you cut out the middleman of ad agencies, right, and can do better than that, because AI is better at targeting than any human being can become.
Right.
And dude, they're one ChatGPT partner away. If they could find a way to partner with OpenAI to get the data from, like people use ChatGPT as their therapist.
Right.
So nobody knows more about the person than ChatGPT. So they're one partnership away from saying, hey, OpenAI, let us get some of that data because we want to be able to serve your customers better and put the ads that relate to them most.
Yes. Yes.
Because before we had to use like Facebook searches and Google searches, but people are using OpenAI and ChatGPT more than they ever use Google. They're using it. It's going to know more about them than their spouse.
Yep.
You mean to tell me I can get to that customer with my product? Man, look.
Yeah.
Hey, I'm about to readjust my portfolio when I get home. Okay.
There we go. So you heard it first. Super bullish on Meta and all that they're doing in the foreseeable future.
All right. Next is Tesla. Now, Elon Musk has lovers and haters right now. I don't think there's many people in between on Elon Musk, right?
It's either you love him,
or you
hate him. Yeah.
And Tesla they had some probably one of the most volatile stocks. In the past year.
Oh, for sure. Last couple of years.
Yeah. It's moving like crypto. Dude, ups and downs.
Yeah. I saw the other day. There's like the upside. I don't know I can't remember the exact percentage, but the amount of upside that they had this past week for a $1 trillion company is insane. Like, it literally moves like a penny stock in terms of like how much upside it had. So yeah, it's moving like crypto. It's moving like a penny stock. Very volatile, right? Which has a lot of people nervous, right? When it comes to that position.
Do you think that Tesla will be the leader for robotics?
I do. I think they'll be the leader for robotics. I think they'll be the leader for self-driving cars. Because people, when they see Tesla, they think of the car. That's all they think about.
Not me. Not no more, yeah.
Right, but we forget and don't realize like what Tesla has its hand in so many different things. I do think the robotics piece is going to be huge for them because right now, we're looking at the power of OpenAI and artificial intelligence that we can just type from behind a computer screen. When we take that and now these people can go paint and build houses and do all sorts of things, right? Yeah. These menial tasks that, or even some of the stuff like being in caves and mining, right? Like, human beings should not be doing that anymore, right?
Yeah, some guys, you see my Instagram story of the guys that's hanging off of the ceiling in
cleaning windows.
Off the roof of my building, cleaning windows. Humans should not be doing that job.
Humans should not be doing that anymore, right? So I think Tesla's going to lead the charge in robotics, and that physical manifestation or translation to the technology that we all now have access to, I think is going to pose a lot of big upside for them.
I believe in the intelligence of Elon Musk, period. So, love him or hate him, political, not here for that. He is one of the smartest people in human history. And I bet on intelligence.
Yeah.
So, that alone, I'm sold.
Fair enough.
Yeah.
You heard it first.
Okay, now I haven't heard of this next company, Broadcom.
Yeah.
What are they, and why should people be looking to them to invest?
Yeah, Broadcom, many people don't realize they actually supply a lot of chips, right?
Okay.
A lot of AI chips, right? For networking and smartphones. They recently acquired another company that's just deepening their valuation and their reach. And I believe, so I look at Broadcom as one of those behind the scenes companies that you don't know or think about, but they power a lot of other companies. Like, for example, people ask me, should I invest in Home Depot or Lowe's? I say invest in the lumber company that supplies both of them, right?
Sure.
And so that's how I look at Broadcom. And so with the continued need and increase for AI chips and things of that nature, I believe that Broadcom is going to continue to be a company that is stable and continues to provide value in the marketplace. And where they create their diversification is the fact that they are a behind-the-scenes company that's supplying a lot of the companies that we know and love, which creates a broad diversification for them and technically a moat, if you ask me.
Okay, and ticker symbol is AVGO. For the rest of the companies, I'll make sure I get y'all the ticker symbols here, how to look them up.
Yep.
Next is Salesforce. Salesforce, their ticker is CRM?
Yeah.
Wow, they must have been first. Okay,
Yeah. I actually have a love-hate relationship with Salesforce.
Yeah,
so,
go ahead and talk about that. I remember that,
So we were potentially going to transition. Well, we did. We paid the money to transition to Salesforce as a CRM company. And Salesforce is amazing for the right company, right? If you have 500 or thousands of employees and you have somebody who's dedicated to just making the CRM system as customizable as possible for your company, enterprise level, let's call it that, I think Salesforce is great. But for the small business owner, less than 50 employees, Salesforce is a little bit clunky in my opinion and just didn't work for us. Doesn't mean that it's not a good stock though, right? So Salesforce is a CRM system. Now, as an entrepreneur, you have to have some type of CRM system, right? This is your data aggregation hub. This is what tells you the most about your customer. CRM stands for customer relationship management. This is where and how you manage the relationships. It is what gave me the ability to do things like we have this form that we give all of our clients called the Getting to Know You Better form, right? Now, I would love to think that my memory can remember every small detail about our clients, but it cannot. We have that form, they complete it, it goes into their CRM profile, and as a result, now we have that data in real time to be able to remember that they love Chinese food, they just got a new job, and we are sending them a gift card to a Chinese restaurant that's 2 miles away, right? That is how you manage relations. That's a business lesson, not a stock lesson. Now, while we believe Salesforce will do well for the foreseeable future, again, AI driven, but AI is all rooted in data, right? And when you own that amount of data, right, because you are a CRM system, putting AI on top of that is just going to deepen the value that you can provide to your customers and ultimately the value that you're going to be able to provide to your shareholders as more and more people adopt the system. So they have strong, great recurring revenue. Like, let's not overlook that, right? Recurring revenue, because with CRM systems,
SaaS.
exactly, yes. So SaaS companies, software as a service, typically always have very high valuations because one, it's infinitely scalable, right? And then two, people are typically paying annual subscriptions or monthly subscriptions. Salesforce subscriptions are not cheap, and most times they're multi-year, especially on the enterprise level. So that's going to bode very well for their stock price and their overall valuation, and just give them predictability with the amount of money they can invest to double down on AI and innovation.
Love it. Okay, so the last technology company is ServiceNow, ticker symbol now. What is this company? What do they do? And why should people invest?
Yeah, this is actually a company that's on my watch list. I'm not personally invested in this, so I'm going to kind of read some of this verbatim because I felt like it was good for you guys to know. And that's another thing, too. Just because we're talking about 25 stocks on this list does not mean you need to immediately have a portfolio of 25 companies,
do
right?
not do that.
Right, I wouldn't recommend that actually, right? So what I wanted to do is not be biased and just say, hey, here are the top only stocks that I'm invested in. I wanted to deepen my research and see what are some stocks people should consider adding to their watch list or should be considering in general. And so this was one of them. ServiceNow, ticker symbol now, another great one, right? Provides enterprise digital transformation and accelerating it. ServiceNow's workflow automation tools are mission critical for productivity and compliance. So again, this is another one of those like behind the scenes companies. Like, you need this, right, to run. You need this to have compliance. It's not going to be sexy. It's not going to be something that everybody knows and loves, but it is going to be something that these businesses are buying in order to make sure they stay compliant with what they do. They have strong annual recurring revenue and strong business growth. And so for that reason, and the fact that a lot of the technology companies that you know and love would find value in the software, I believe that ServiceNow is one that you should watch.
Okay, so enough for technology. I feel like we went over a lot of technology stock. It's one of the fastest growing sectors, so we have to spend some time
for sure
going over our favorite technology stocks. Now let's move on to a different sector, which is healthcare, which I think is just paramount in today's age. People want to live longer, right? People are living longer, right? And healthcare is one of the main reasons for that. So healthcare remains a critical investment sector that people need to know about and need to know which stocks to invest in, especially pharmaceuticals. Multi-billion-dollar, if not trillion-dollar industry. So we cannot forget about that. So the first company, I'm sorry, I'll tell you why I'm laughing later. The first company on the list is Eli Lilly. Now, you told me about this stock maybe like 6 or 7 months ago.
Yeah.
And I wish you told me about it 2 years ago.
Actually, I told you about here's the deal with the car, right?
I don't listen the first time.
I will tell you. You don't listen until you see it run up.
Yeah.
I'm like, bro, why didn't you tell me? And I go, I'm the receipt king.
Screenshot.
Told you. Right? Yeah. So, to Carter's point, healthcare sectors, pharmaceutical, the wellness industry in general. Everybody wants to live longer. They want to feel better. I've never seen more prebiotic sodas and all the things when it comes to feeling better with your body, right? So Eli Lilly, from a pharmaceutical standpoint, they're a leader in the diabetes drug. I think it's Mounjaro, I think is what it's called.
Okay.
And then they also are now one of the leaders in an Alzheimer treatment drug as well, right? Okay. And so, with these types of drugs, right, people don't want to get Alzheimer's. We see that type 2 diabetes is on the rise because of insulin resistance. And as a result of this, being a leader in providing the solution, if you will, or at least the short-term solution. Yeah. The real solution is health, right? Eating the right things, getting the right sleep. Let's go on the record there. Yeah. But at the end of the day, like Alex Hormozi always says, right, what is it, the high perceived value of the outcome, something like that. Basically, like highest perceived perception of the outcome.
Yeah.
So do I think that I'm going to lose the weight by going to the gym 5 days a week, eating the best food, or getting the diabetes drug, right?
Yep.
And regardless of what your decision is in that, they understand where they are in the marketplace. And as a result, this is going to continue to make this company do very, very well. They invest a lot in their R&D, which stands for research and development. In our world, we call it rob and duplicate. You see somebody doing something well, say, let me get that. But Eli Lilly will continue to be a leader when it comes to pharmaceuticals, especially when it comes to their diabetes drug and their Alzheimer's treatment.
Run about me one more time, D.
What? Oh. Yeah. We might let y'all in on that inside joke one day.
One day.
One day. One day. Run that back.
Okay. Okay, let's get it together. So next company is Abbott Laboratories. Now, I don't think I ever told you this. Abbott was the first company to take a chance on me in college to give me my first job offer.
Oh, really?
Yeah.
Wow, shout out to Abbott Laboratories.
$27 an hour, and I was like, yo, somebody want to pay me that?
Yeah.
And then KPMG came at 30-something, and I was like, I'm sorry, guys.
I need that.
I need that.
So
awesome. Abbott Labs, I know they're big in the pharmaceutical and healthcare space, but why is this company on your list?
Yeah, so they provide essential diagnostic and medical devices. Again, another trend I want you guys to see here. Background company, right? Essential diagnostic and medical devices. Companies need, a lot of these companies are not vertically integrated in that sense, and they outsource where they buy these tools and resources from, right? So as the healthcare sector, as the pharmaceutical sector continues to thrive, they're gonna need these resources. So for example, one of the things that when it comes to diabetes is the glucose in your bloodstream, right? And I don't know why I know this. I had a great biology teacher, but the chemical formula for glucose is C6H12O6. I've never forgotten that, right? It just has stuck with me. But glucose monitoring is the way that you can see the levels of insulin resistance in your body, right? So this company provides those glucose monitoring. So as you can see the positive correlation between a company like Eli Lilly, right? As they're selling a lot of this diabetes drug, a lot of people want to monitor their insulin. Who's providing the monitor to be able to help you do that, right? So that's one of the reasons. Obviously, they also have consistent, strong dividend growth, right, and solid return on investor capital, which is an important metric when looking and researching a company. And so for that, I think for long-term investors in particular, this company is going to do very well for you in your portfolio if you decide to invest in it.
Okay, so we got 3 more healthcare companies, but this is what I think we should do. I think we should give them the names, and you should speak on one, so we don't have to go through all of them.
Sure.
Okay, so the next 3 healthcare companies are Intuitive Surgical, ticker ISRG, Boston Scientific, BSX, and then Stryker, symbol SYK. If you have to pick between 3 of these, which one would you want to talk about, and I'll let you dive into that.
Yeah, I would talk about Stryker. And the reason why I would talk about Stryker is because they're orthopedic and robotic-assisted surgical solutions,
That's
right?
crazy.
Which aligns with the growth and advancement of AI. Right. So for me, if I were going to pick one of the 3, that is the one. That's actually one that I'm invested in. Okay. I have like a test pilot portfolio before I make it public to our clients. And that's what I'm invested in because I'm looking at the alignment of the surgeons of just the medical industry in general, right? On top of that, robotics, right? And then AI. So I'm looking at this domino effect of this being a company that's ripe to be at the leader, at the forefront. The same way NVIDIA was positioned for this AI resurgence, I feel that they will be positioned the same way from a medical industry perspective.
I love it, man. I love it. That's beautiful. So now we're done with healthcare. Let's move on to financial services. Now, as we all know, financial services is one of the fastest and just most highest revenue industries because they talk about money. We're literally at the New York Stock Exchange right now.
Right.
Trillions of dollars trade on these floors. So we would be remiss not to spend some time talking about some of the best financial services companies to invest in. And so first on this list is J.P. Morgan Chase.
J.P. Morgan.
And they are holding all of our business assets at the moment. So we know they're doing just fine.
Exactly. Yeah. And that's literally, the number one line on this sentence, right? So it's like they're fortress of a balance sheet. How could you lose when you manage and hold so much of people's money? And we all know how the banking industry works, whether you like it or hate it, right? We understand that they have the ability to loan out 10 times the amount of money that they have in deposits, right? And so when they have so much money in deposits and their balance sheet is so strong, and business banking makes up a large part of what they do, which is huge, right?
Yeah.
Because the thing about banking, It's just the reality is, even if it's not that great, like it's so cumbersome to transfer, right? And so whether you love or hate your bank or not, most people aren't just like, oh, my bank didn't treat me right today, let me go to another bank, right? And so their balance sheet is incredibly strong. And they have great return on assets, right? And even through all of the economic uncertainty, right, they have remained incredibly stable, right? When we saw, I think a couple years ago, it's crazy how time flies, but some of the banks failed. It was the Silicon Valley Bank, and some other banks that were regional banks that were failing, right? It's like JP Morgan Chase right here to the rescue, right? And so when you think about that and people just wanting more certainty in today's economy, JP Morgan Chase from a financial sector is always going to be a staple. Tremendous dividend growth and consistency, and Jamie Dimon is a dog of a CEO.
Absolute
right? He wants y'all back in the office. He don't care. Right? That's what you want. You might not want that as an employee, but you do want that as an investor.
Period.
Right?
Period.
So JP Morgan is definitely at the top of the list when it comes to the financials.
Okay, next. And this is a bit sad because this year the CEO founder of this particular investment institution decided to retire. The GOAT, the greatest of all time. Hung it up after 50 plus years, maybe more than that. 50 plus years, and we're talking about nothing other than Berkshire Hathaway, fearless leader, and Warren Buffett, who decided to step down this year after just dominating the investment sector for so long. So, I mean, there's no surprise why people should be investing in Berkshire Hathaway, but I would love to hear from you.
The reason why we still love Berkshire Hathaway is its strong holdings in insurance, energy, consumer goods, and it's so diversified, right? And if you look at their stock price, you'll notice something starkly different than you see with most of the stocks that we know and love, is that they've never and never will most likely do a stock split. Right? And they're just purely based on value. We don't care who can afford to buy us, right? But Berkshire Hathaway has just been ran tremendously. They have over hear me clearly, $150 billion, right, on the sidelines, right? Cash reserves, which gives them so much opportunity for acquisition. Right? Which is why he's famed to say, be fearful when others are greedy, and be greedy when others are fearful, right? Because when others are fearful, it gives you an opportunity to buy distressed assets, buy assets at a great price, because we know he is the king of buying undervalued assets, right? Even when other people are think his model is outdated, he is not and does not want to overpay for a company, and his long-term ROI is a reflection as to why that's a great strategy.
Sensational investor. If you haven't read the book, The Intelligent Investor, you should definitely read that.
It's a meaty read, but it's worth it. It's worth it.
You're all the basics you need. All right, so the next two companies are similar related, Visa and MasterCard. Now, probably no surprise why these are companies you don't invest in. Check your wallet. Okay, you have one of these cards in your wallet, so I would just love you to talk about these two companies, why people should invest in them.
And honestly, it's really simple. High margin, north of 60%. Low debt levels, right? And we're just going to continue to see a surge in digital payments, right?
Absolutely.
People aren't even pulling out their wallets anymore, right? They're just, boop, boop. Right? You see that skit where the dude had the Apple Pay sound, like say the sound he's walking up to people, like, yo, I need like $50, and you're like, thank you. And people were too old to connect the dots that he wasn't really taking the money. This old dude slapped his phone, like, call the police, But anyway, I know sometimes I don't even leave the house with my wallet, and I'm flabbergasted when they're like, what you mean you don't? I gotta swipe a card?
Tell me you hate money.
Right,
making me pull out my wallet.
Exactly. And if you're a website that doesn't have Apple Pay, let me go on record to say this. If you're a website that does not have Apple Pay, just write "I hate money" as your subtext to your logo.
As a letterhead.
As a letterhead, right. My name is X, Y, and Z Business, and
I hate money.
I hate money, just in case you didn't know, right? So we think with the continued growth in digital payments, the low debt levels that these companies have, and the profit margins north of 60%, they're going to be great assets for your portfolio.
All right, last on this list is Goldman Sachs, GS, the OG of investment banks. Probably the largest investment bank. I don't want to speak on record and say that, but definitely probably the largest.
I would say, I would say.
I just finished watching all of the financial movies.
To get your energy right.
To get my energy right for the episode, and I know for a fact that Goldman Sachs is the number one investment bank. But why should people invest in them outside of their just dominance in their space?
Yeah, I would say for a couple of reasons, right? Reason number one is that as we feel a little more certainty in the economy, we're going to see a boost in M&A activity, mergers and acquisitions, right? And as an investment banker, they lead the charge in facilitating those transactions, and so that's going to bolster their balance sheet. So that's one big reason. And also, as we get greater market sentiment, we're going to see IPOs come back to life, right? And as an investment banker, right, those are one of the two areas where you thrive, right? Mergers and acquisitions and initial public offerings. And so I think as market sentiment continues to go on the uptrend, that activity, we're going to see more and more come back into the forefront. I did see that one of my mentors, Rashawn, is teaming up with, what's our guy's name who sold his ownership stake in the Dallas Mavericks?
Mark Cuban?
Mark Cuban. They partnered up, and they're launching an initial $750 million private equity fund in the sports sector, right? So we're going to see private equity, mergers and acquisitions, and just the IPO market continue to come back. It kind of slowed down in early 2022. Haven't seen it pick back up as much, so I believe that with the resurgence of that, Goldman Sachs is going to be another staple to have in your portfolio.
Okay, speaking of portfolio, you need, as much as growth is amazing, you need stability in your portfolio.
Yes, you do.
Right? Especially during times of high volatility. Nobody likes to see their portfolio drop 10, 15% in a week. So by having some of these stable companies, it will offset some of the volatility in your other companies. So we cannot forget to bring stability into our portfolio. And these next companies are what we look at as recession-proof companies. Like no matter what's happening in the economy, people need these companies. So these are companies you should be looking to invest in, okay? And coming up on number one is the OG of OGs, Coca-Cola, which is what Warren Buffett is one of his favorite investments of all time.
One of his favorite investments. He never has a press conference or shareholder meeting without having two Cokes on the table. Yeah. Right? And maybe he's a little biased because he's heavily invested in the company. But hey, I'll take that bias all day long. He's from one of the greatest investors of all time. I mean, self-explanatory, right? Household name. I know that with the surgence of, the healthcare sector, we maybe wonder, does sodas and things of that nature still hold the same presence that they did? But the truth of the matter is yes. And they operate in over 200 countries. And on top of that, remember, Coca-Cola is not shy to acquisition either, right? Mm-hmm. They're not shy to acquisition. So when you see I think we saw Poppy, was it? They got acquired for, is one of those prebiotic soda companies. Pepsi maybe acquired them though. Okay. But those types of companies that are coming up, right? Coke is no stranger to acquisition, right? So even though, Coca-Cola and, its core product, people might feel like there's some market share that they might be losing.
They'll just buy other companies and say, hey, sales, let me get that.
Yeah, they'll just buy those companies and bolster their portfolio. It's a tremendous amount of brand loyalty, tremendous amount of dividend growth, and for those reasons alone, I think that the stability it provides to your portfolio, Coca-Cola is still one to have. Everybody wants to chase growth in the tech sector. I get it, but as Carter mentioned, we do want to have some stability and predictability in our portfolio.
All right, so next up is PG, Procter & Gamble, leader in their space. But why should people be investing in Procter & Gamble outside of being a household name that everybody knows and loves?
Yeah, you mentioned that these companies that we're talking about are recession-proof, right? Yeah. Like whether the economy is good or bad, you got to brush your teeth. I hope so.
You better.
Right? You got to put deodorant on. You got to wash your hair, et cetera, et cetera. And then when you think about, again, another honestly behind the scenes company, right? Like when you think about the strike at Target, or not strike, or whatever happened with Target, these products are the
Target
products.
brought that upon themselves.
Yes, they did.
They did that.
Yes, they did, right? These products are on the shelf at Target, they're on the shelves at Walmart, they're on the shelf at CVS, Walgreens, etc., right? So they have a tremendous amount of stability because they are the products that the big box stores are purchasing. And they're just things that people need on a daily basis, right? These are consumable goods, right? These are staples that people need to have. And as for that result, right, I believe that they'll continue to remain a staple in your portfolio.
All right, next on the list is Costco. Now, Costco, what I love about Costco is they were the first to make you pay to go grocery shopping. Yeah. Like they put a SaaS product on the front end just for you to spend money in the back end. That's what I call LTV, lifetime value of a customer. You have to keep paying us to shop here. And when you shop here, you only shop here to buy in bulk. So I make you pay reoccurring and I make you spend big time money when you get in my store. So that's why I love this as an investment. I want to hear from you as well.
Yeah, those are all great reasons, and because of that membership component, it creates a level of customer loyalty, right? I'm a member of Costco, and that membership piece is 100% margin, and people love the pricing efficiency, being able to go to Costco and get those goods in bulk, especially during times like this, because people are looking to save any way they can. So the normal person who might just go buy the 4 rolls of toilet paper from their local Target or whatever, they're not, like now they're looking at the margins and say, let me go buy this in bulk. It's going to save me 15%, and more people are keen to that in these times. So I think Costco is positioned well for that. Not to mention the expansion of e-commerce, right? And so with Costco expanding in the e-commerce sector, people can still have that brand loyalty that they have with Costco, but also do it from the convenience of their own home. And so as a result, right, we continue to win.
All right, so last two on the list, I'll lump these together. So Walmart and Pepsi. We don't have to talk about Pepsi. We talked about Coke, very similar. But let's talk about Walmart, which is a staple in America, and with the recent things that happened with Target, with them declining to embrace diversity and all those things, the black dollar goes far, whether they want to believe it or not. So now we're seeing the people that was shopping at Target or Target saying, I'm just going to spend my money at Walmart, right? Yeah. Because y'all blew it in the fact that you don't support you're not fully supporting African American culture. So what do you feel about Walmart? Why do you feel like they're going to win? I love this company. I mean, there's very few companies who can price to be the lowest and still have an amazing business.
Yeah. I mean, so Walmart, to all the points that Carter just mentioned, that's why I believe that they'll continue to do well. Also, they have a tremendous and expansive footprint. I mean, you can't drive 5 minutes in many places without seeing another Walmart. So their footprint is huge. They have strong earnings per share growth and just overall operational leverage because they have so many stores. They're able to just be able to really source their products in a very efficient way, which allows them to price so efficiently. So I love Walmart as an investment. I think it's a great company. I think they were able to, again, take a lot of market share, whether it's long-term or not to be determined, from Target. And as a result, Walmart will continue to be a great company to consider adding to your portfolio.
Yeah. So guys, those were the top 25 stocks to consider investing in.
On the consider.
In 2025, and do us a favor in the comments below. Let us know which of these companies are your favorite and why. We want to start some communication in the chat. We're going to be responding to the comments, and let us know if you like this episode. We would love to dig deeper on this, and I would love to pull more strategies out of George. But let us know if you all like this. Let us know if you all enjoyed this, and if you didn't tune in from YouTube, watch this on YouTube. We're in the New York Stock Exchange. It's an amazing field. And again, if y'all like this, we'll produce more. Can't wait to see you all next time.
Until next time.
Peace.